It's becoming common knowledge that the electric vehicle industry is currently booming, and it's been experiencing an upward rise as the world continues to go green and environmentally conscious. Experts advise investing in companies with a future in the eco-friendly market, and what better companies to look into than the automobile industry. But what company stock should you put your money into? As both legacy original equipment manufacturers and newer firms like Tesla and NIO are currently in the race, the competition is obviously tight and bound to reward relatively early investors. Which company stocks should you purchase, Tesla or NIO stocks? What do experts predict the growth rates will be? Keep watching today's video to find out. Tesla and NIO are automobile firms specializing in the design and development of electric self-driving vehicles with equal plans of dominating the market. Tesla stock has lost over 12% of its value, while NIO, the Chinese electric vehicle manufacturer, has started on a stronger note with stock prices nearing $60 a share in January 2021, but has now lost over 2/3 of its value today, making it the right time to buy the dip. NIO has had a rocky road for investors with stock prices plummeting by around 35%. NIO bulls have seen the sell-off as an incentive to invest at a discount in the Chinese electric vehicle market, while NIO bears see plenty of volatility in NIO's future in 2022. Tesla wasn't safe either. Tesla Incorporated has equally had a rocky start to the year, with stock prices plummeting from $1,236 in November 2021 to $922.43 in January 2022, and is still on the decline in February. Experts say these declines have created purchasing opportunities for both stocks. NIO's stock price is currently $23.21 and has experienced a 6.11% drop as of the 19th of February. Since NIO stocks are cheaper compared to Tesla's $856.98, your inclination might be to jump on it. However, in today's video, we'll be making a case for why you should pick Tesla stocks over NIO stocks. NIO's growth may appear to be faster than Tesla's, but it's based on such a small foundation that a straight comparison isn't really relevant. Chinese electric vehicle manufacturers, on the other hand, are increasing at a higher rate than Tesla globally. In China, both Tesla and NIO are increasing production and sales. Rather than focusing on which business is providing the most automobiles, it is more important to consider the industry's overall growth. The Chinese electric vehicle industry, as well as the worldwide electric vehicle market, is likely substantial enough for both Tesla and NIO to succeed. When choosing stocks, a great metric to consider is the growth rate. NIO Incorporated is one of the leading electric vehicle companies in China, with a strong brand and a unique battery-as-a-service offering that has piqued consumer and investment interest. However, it's still a minor company compared to Tesla, which is now the global EV market leader. When comparing growth rates, a good metric to use is PEG ratios, but as those statistics are currently unavailable for NIO, we'll be looking at other factors. NIO is currently focused on its home market, which was also Tesla's approach when it was a smaller firm, but the company is currently attempting to gain market share in the international markets as well. Tesla, on the other hand, already has a fair share of the international market and continues to expand its reach, giving it a growth head start. The company is currently pursuing new countries such as India, where the electric market is gaining traction thanks to favorable regulatory environments and government initiatives around the world. Tesla shares have already factored in a lot of growth, although if NIO can repeat Tesla's performance, that could be justified. But what are the chances of that happening? Let's look at the numbers. NIO, which was formed in 2014, now has 3 premium electric SUVs on the market: the ES8, ES6, and the EC6, all of which start at around $50,000. NIO delivered almost 20.5K automobiles in 2019, an increase of 81% year over year, and we anticipate an increase. However, in comparison, Tesla's deliveries climbed by 50% in 2019 to 368K vehicles, and that number rose even more in 2020 due to the debut of its Model Y and the opening of its Chinese facility. Once regulations and certifications are granted, we expect production at Tesla's new factories in Germany to begin shortly after. Production has already commenced in the Texas factory as it is. The company expects to increase its annual production capacity to 2 million units. NIO still has a lot of ground to make up for Tesla's Shanghai factory alone in terms of production. The corporation, on the other hand, has a strategy. It plans to release new products in 2022 and began expanding production capacity last year with the goal of reaching 300,000 units per year. While this will still fall short of Tesla's China production output, it is a start. There's still the issue of regulatory uncertainty when it comes to Chinese stocks, though. In 2021, regulators in both China and the United States put pressure on Chinese stocks. Government officials in China have taken steps to limit the power and growth of internet, fintech, gambling, and education enterprises. Chinese car stocks have escaped the wrath of Chinese regulators thus far, but international investors are naturally wary about the Chinese government's next move. Furthermore, the Securities and Exchange Commission of the United States recently announced a new rule that would delist any Chinese stocks that failed to meet tough new audit criteria, aiding to NIO's investors' regulatory uncertainties. The opposite is the case for Tesla, as President Joe Biden had previously signed an executive order that kick-started the electric vehicle industry in the United States. The order sets a goal of 50% electric, hydrogen fuel cell, and plug-in hybrid car sales in the United States by 2030. The government is relying on a combination of policy efforts and finance to attain that goal. It intends to improve auto fuel efficiency standards for 2026 models produced by major American automakers and has already set aside $7.5 billion to the $1 trillion infrastructure bill currently working its way through the House for charging stations for electric vehicles. As Tesla has the best brand recognition of any vehicle manufacturer, it dominates the industry in the United States. This can only spell good news for the brand in terms of sales, more recognition, and overall growth. NIO reported a net loss of $835.3 million in the third quarter of 2021, up from $587.2 million in the second quarter. NIO stock, which closed at $29.30 on January 9th, has a buy rating and is a $66 price target from the Bank of America, which predicts a $2.8 billion net loss in 2022. As interest rates rise, it will become more expensive for unproductive enterprises like NIO to borrow the capital they require to expand. Unprofitable electric vehicle stocks such as NIO will need to demonstrate to investors that they have the viable, profitable long-term business models at some point. To be fair, Tesla didn't turn a profit immediately either. In 2020, Tesla made a full-year profit for the first time in company history. Tesla's common stockholders earned $721 million in net income in 2020, while non-controlling interests earned $141 million. However, now that it's turning profit, the company is definitely a safer bet and investors could be more certain of what the future holds. Overall, while NIO's recent rapid growth and innovative ideas like a battery as a service that allows users to subscribe for car batteries instead of paying for them upfront are intriguing, we think it's a riskier bet than Tesla. NIO is focusing on the Chinese electric vehicle market, which has hundreds of players and is extremely competitive. NIO will find increasing production quickly to be a difficult undertaking. It remains to be seen if the company can scale up production whilst maintaining a high quality. Last year, it recalled about 5,000 cars after reports of several fires. While Tesla stock may appear to be overvalued, the company's well-known and coveted brand, industry-leading innovation, software distinction, and rapidly rising profitability may provide a better margin of safety than NIO. Tesla's business model appears to be attractive, and margins are expected to grow further as battery costs fall, self-driving capabilities improve, which might generate software sales, and operating leverage improves. Finally, a debate amongst certain investors exists. Will Tesla be able to withstand the pressure of more affordable yet equally efficient competitors? This comparison can be likened to Apple versus other equally high-tech cell phone brands. While cheaper and equally efficient options are now vastly available, Apple remains relevant and its valuation justified. We believe the same will occur with Tesla, with the company retaining its position as the prominent leader in its field even though other alternatives exist. Which stock would you pick? Are you Team Tesla or Team NIO, or both? Comment down below.